Hey everyone, it's always awesome catching up with you at the end of every month. As the world around us is growing more productive, I'm sharing this update as a video note too. I'm getting more comfortable being in front of the camera and speaking out loud. I know I have a lot of room to grow, but your constant support and kind words genuinely keep me motivated, and I'm really grateful to have such a nice and kind community of followers and copiers. Over the last few letters, I've talked about being cautious and building a resilient portfolio. We have used a lot of analogies of building a fortress, strengthening it, and going for reconnaissance. I was careful not to use the word war because I didn't want to fearmonger or raise alarms. Setting up a defense doesn't necessarily mean we are expecting an immediate drawdown. It's simply about preventing unwanted consequences. And what I love about these analogies is how they help us think long term, build us a strategic roadmap, and figure out the next step. And for us, that next step is gathering enough reserves to survive a war. Even though I hesitated to use the word war in that analogy, it really feels like we are entering the early phases of a metaphorical war. A lot of investors in the last month who were overexposed to high growth names and crypto took the first hit. Analysts have shared different theories about what caused this drawdown. But as always in the markets, the impact is real, even when the exact cause is hard to validate. So, continuing our analogy, we are at the start of the war, and this time to gather reserves. That means we have to focus on building up cash, invest wisely, and look for short-term opportunities with our satellite positions of high growth stocks. Our portfolio is resilient. And while it didn't escape completely, our drawdowns were limited. We were down 0.98%, in line with the broader market, where S&P 500 was down by around 0.81%. Here are some updates about what I did in the last month. I exited our positions in gold via IAU, and in high-yield corporate bonds, we had an equity-traded fund called SHYG. I exited this position. Gold hit a peak and it isn't giving us the hedge we wanted against inflation anymore. I think the recent peak was mostly driven by the very fears we originally intended to hedge against. And since we got in early, it played out really well for us. I also exited the high-yield corporate bonds because the credit quality has been slipping. Over the last few months, we've seen several indicators showing that companies are taking higher risk as they try to gain market share in generative AI. This is not necessarily bad, but this is a certain amount of risk that we don't intend to expose ourselves towards. On the flip side, we added to our treasury bonds and opened a position in ING Bank. The treasury bonds were trading below par and can act as a great hedge during sharper downturns. Especially given the macro environment and our exposure to high growth stocks, it gives our portfolio a nice balance in terms of risk. And ING has a strong balance sheet and a steady growth, and still trades as one of the undervalued stocks in Europe. So it gives us some exposure to financials at a discount. In terms of performance, Google was our best performance last month with a return of 14%, and Amazon was the weakest with a 6% drawdown. Our long-term thesis hasn't changed for either of them, so we didn't adjust any allocations. I personally feel Amazon's dip is an overreaction, and we will keep an eye on it so we can leverage if it further pulls down more. For anyone planning to add funds, please try to do so in the first week of December. I'll be doing the monthly rebalance on December 5, 2025. Consistency really is the key. And I encourage all the new copiers to check out my earlier posts and videos whenever you have time. And if you haven't already, do subscribe to my YouTube channel. And I plan to communicate more via videos going forward. As always, I hope I'm being transparent and clear about the decisions that we have made and the directions we are taking. And through the analogies, I try to make the story easy and understandable for everyone. So, I would like to sign off wishing you all a very happy Thanksgiving. And truly, thank you. Your trust and your support means a lot, and I feel grateful to have such a great community and kind community around me. Thank you. See you in the next update.